This series, examining how to be a successful owner-operator, is brought to you by Michelin Canada. Michelin, a better way forward.
In part 4, we talked about managing and controlling expenses, and a key element to that, and perhaps just as important, is money management in general. Can you share a few tips on how you manage your money as an owner-operator, starting with a reserve account and what that is all about, why someone needs a reserve account?
Well, most definitely. I encourage every owner-operator to have a reserve account. We call a reserve account, say 3 months worth of operating funds, and that's a difference from a maintenance escrow. It's just it's funds that are available should something unforeseen happen, that you're not going to fall behind on your truck payments or a mortgage payment or other personal obligations that you might have. So you know, it's difficult to put that aside, and that's why we also tell a lot of prospective new owner-operators that your lifestyle might get impacted for a while you build that up. But you need to have that reserve and that confidence that should something happen, you'll be okay to weather a short storm anyways.
Okay. Now, as an owner-operator, I'm going to have my business credit card. I'm sure I can get a cash advance off that. Is that a dangerous path to go down?
Obviously, you know, the price of cash advances are very expensive off a credit card, and even off a carrier. Most carriers will allow certain amounts of money off maybe their fuel cards, but it just doesn't look like you're managing your money properly when you're taking those expensive ways of grabbing cash. You're better off to operate off cash in your pocket out of your bank and not have to pay those high exchange rates and interest rates.
Is it safe to use a credit card for things like fuel purchases and hotels when necessary and stuff like that, or is a credit card something you should avoid altogether if you can?
No, I'm not suggesting that you don't use credit cards for those things. You pay the balance off as soon as the credit card comes in. Get a low interest credit card so that should you not be able to make that payment, that you don't get whacked real hard with ridiculous interest amounts off a credit card. But no, everybody's going to carry a credit card, and usually if you're going to sign on with a carrier, they'll have a fuel infrastructure that will allow you to buy fuel and charge it through them and take advantage of their volume buying and fill your truck up that way. But as far as any hotel rooms or those types of things or parts you might buy on the road, you're typically going to use a credit card, and again, a low interest credit card, and pay it off when the bill comes in. Don't let it slide.
There's so many expenses involved in operating a truck from day to day. It's a little daunting to think about the future as far down the road as retirement might be. Is that something you need to start planning for early in your career?
Again, most owner-operators don't think this far out, but you're no longer an employee of someone else. You're your own employee now, so you need to look after yourself, and you should have goals. You should plan on putting monies aside for retirement, RSPs, for tax planning, and for your future, and even budgeting for things like a vacation with your family so that you can get out of the truck once in a while and get some brain drain in. So most definitely put some monies aside for that so you don't end up being 70 years old still pounding the pavement trying to make the next payment.
What do you need to know about paying taxes as an owner-operator? I mean, a tax bill at the end of the year is nothing that you want to wake up to if you haven't been preparing for it. So do you have any advice? Do you put money aside on a regular basis? How do you make that tax bill a little easier to swallow?
Well, it's a trap that a lot of new owner-operators fall into, and I've seen it over and over and over again where somebody's gone out and bought a truck, and all of a sudden they've gotten their check. Maybe their fuel's already out of the check. They know what the truck payment is, and it looks as though they've made a huge amount of money compared to being a driver, but obviously there's no source deductions off that. There's no unemployment insurance or CPP or any income tax, federal, provincial, off that. So, in my past, I've seen new owner-operators all of a sudden driving new pickup trucks or going out and making large purchases, and there's a day of reckoning that comes when that tax bill comes in after you do your filing a year later, and you get a big tax bill. So most definitely you need to be setting funds aside to prepare for what the inevitable tax bill is going to be, and you really got to keep your head about you. I've also heard other owner-operators that have got a few years under the belt bragging that they've got these great accountants and they've never had to pay tax since they've become owner-operators. But again, these guys have their own house, they're driving fairly new trucks, and the tax man's not stupid. Somehow you're doing these things, and should an audit come along, you can get yourself in a bunch of trouble. So yeah, you want to prepare, you want to put some monies aside and make sure that you're covered off on those eventual tax bills that are going to come.
And speaking about taxes, how do you handle meal claims when you're on the road? What's the best way to stay organized and make sure you're maximizing the amount of meal tax rebate that you can get?
Well, this is my advice to owner-operators is there's a big misconception about this per diem issue. Per diem is an amount of money that's allotted to an employee who travels. The key word there is employee. If you're self-employed, you're not an employee. So if you're not an incorporated company, you're not an employee. So what the government allows you to do there is that you have to, you can still claim meals, but you have to hang on to every receipt that you have. If you're incorporated, then you're your own employee. So then you get the max per diem, which right now is around $44 or $54 a day, and you can claim that every day that you're out. You keep your log books to verify that amount, but you don't need to keep those receipts. What a lot of owner-operators do and with their accounting firms is they claim the per diem even though they're not incorporated, and typically the accounting firm will have them sign a statement saying that they understand that if they're audited and there is a claim back, that the tax preparer is not going to be held at fault for that. So there's a real gray area, and some owner-operators are audited as a sole proprietor and they're not clipped, they're not caught for that issue. Others are, and it's very expensive if you're caught claiming per diem and you're not an employee. So, the government hasn't helped the industry with that little bit of confusion. But the key thing and the key verbiage is employee. You have to be employee, and you can be your own employee. You can own the company and issue yourself a T4 slip, which makes you an employee. But without that T4 slip as a sole proprietor, you're supposed to keep every meal receipt, and if you go to the grocery store, you keep that receipt. So it's very paperwork intensive, and you've got to be very disciplined to put all those things aside and make sure that you're recording on the receipt what trip it involved, and going to Texas on May the 13th, each one of those types of things. And the vast majority of owner-operators don't have that kind of discipline, and just because it's a bit tedious. I mean, just tracking the fuel and your other expenses is one thing, but tracking 3 meals a day when you're out for 7 days on top of everything else you're tracking, it can get a bit burdensome. So I typically advise owner-operators to get incorporated just for that reason. It's a little more money to get incorporated, that the tax prep is a little bit more expensive because you're doing 2 tax returns. You have to do one for your corporation, one individually. But if you think about, you don't have that huge burden of tracking every cent that you spend on food. I think it balances out. And typically those owner-operators that say they're going to track all those receipts don't. They end up signing that waiver that says their tax preparer won't be held responsible should they get nailed. So,
well, given that, how important is it that you work with a tax preparer that understands the intricacies of the trucking industry?
Well, I think it's very important. Trucking right now represents a significant part of the GDP of our country, and as such it has specific rules that govern trucking. And if you're taking your tax work to someone who isn't familiar with those rules, or maybe does 4 or 5, 6, 7 other industries and is really not a master of any of them, I don't think that's going to serve you as well as somebody who lives in that world and is familiar with all these changes in meal per diems and the deductibility of truck payments and all these other things that apply to our industry. So I really think it is important.
So now that we know a few things about managing our money, I guess it's time that we can finally go find someone to work for.
Yeah, that's typically the next step. A lot of prospective owner-operators end up working for the company that they're working for now, who might have an old fleet, but certainly should shop revenue, should shop those contracts and see how they stack up.
Okay, more on that in the next segment.